Shifting our focus in Washington now to the repayment of TARP money. A new report out today says the Treasury Department should have recovered $10 million more than it actually did from warrant sales with 11 small banks. Bloomberg's Peter Cook is back with us from Capitol Hill, and he has Elizabeth Warren with him. She's the head of the Congressional Oversight Panel on TARP. Peter, take it away.
Thanks very much, Eric. The Congressional Oversight Panel releases a report every month. This latest report, as you said, dealing with the issue of TARP repayments, specifically the warrant issue, valuing those warrants. Is the government, our taxpayers, going to get their bang for their buck from these investments? First of all, Professor Warren, thank you again for the time. I appreciate you joining us.
Glad to be here.
Your all's analysis of at least small banks and the repayments, the warrant issue so far, suggests taxpayers are not getting the full bang for their buck.
That's right. We did a valuation of those warrants, and we discovered that Treasury was getting about 66 cents on the dollar for what was a reasonable market valuation for them.
And this is significant because, of course, these small banks are important, but we've got a whole host of big banks who are about to try and repurchase their warrants, substantially larger sums of money here. You have concerns that this sets a template for the future?
Well, that's exactly right. This purchase was only 1% of the total amount that's going to be out there. So we thought this is the right moment to step in. That is to show that there's a good valuation model, to jump on it and to say, here's where you are right now, and we're going to be here crunching every one of these numbers. We think that maybe that'll be helpful in the negotiation process.
All right. Well, as you know, there are multiple factors here. The Treasury has said it has to weigh here. Not only return for taxpayers, but also the Treasury wants to exit these investments as quickly as possible, allow these banks to stand on their own. How did you weigh that tension as you conducted this analysis? Because if you push for full taxpayer returns, it may take longer.
So what we did is we thought the place you have to start is you have to know what market value is, the best estimation of what the value of these assets are. And so we did the complex model. We had the Harvard Business School professors come in, and look at both our inputs and the model we used so that we were confident we had a number. And then we stopped and said, look, there may be competing policy considerations. Treasury may want out fast, but they need to articulate that. In other words, we need a very transparent process when they're selling these warrants. This is the taxpayers' last chance to have any participation in the upside for having bailed out these financial institutions.
And if this template, again, were to be followed with these larger banks, your analysis suggests more than $2.7 billion would be left on the table?
That's right, nearly $3 billion left on the table. Now, it hasn't happened yet, so that's the good news. We're hopeful that there will be procedures put in place so that we can shrink that number down. That is, that we get something closer to market value. One of the things we suggest in the report is that the possibility of just auctioning these off in the open market. Because when that happens, you get a lot of people bidding, including the bank itself trying to bid to buy back its own warrants.
And that is indeed the process set in place if the Treasury and these banks cannot agree on the terms. And the indication we're getting at Bloomberg is that Treasury has basically said to some of these large banks, listen, we don't agree with how you all are valuing it. We're headed for this third-party auction.
Yeah, and we are delighted to hear that. We think third-party auctions put a lot of sunshine on this. And, the market is what the market is. We can run our models. Treasury can do its estimates. But the truth of the matter is let's see what the market will pay for it. When that happens, the American people can have confidence. We did the best we could. We really got the fair price for them.
There's a reporting today, the Wall Street Journal says that Jamie Dimon himself, the head of J.P. Morgan, called Treasury Secretary Geithner and disagreed with the Treasury sector, the department's valuation of J.P. Morgan's warrants. Are you encouraged by those indications?
I have never heard of a buyer who didn't tell the seller, you're asking too much for this. I assume this is part of good negotiations on Jamie Dimon's part. And I'm glad to stand here on the other side on behalf of the American taxpayer and say to Treasury, no, you're asking too little. Maybe we can balance each other out.
Isn't there something to be said, though, again, for a quick exit here on the part of Treasury? Nobody wants the government involved in private sector businesses any longer than possible. Isn't that just as high a priority?
I think it's a high priority, but remember, we're only talking here about warrants, the ability to purchase in the future. And so that means taking a little time to sell those warrants at a public auction. We know how to sell warrants. There's a whole marketplace that does this. So we're not talking about years. We're not talking about months. Quite frankly, I'm not sure we have to even be talking about weeks. We're talking about still a speedy exit for the government if that's a high priority.
What about the notion, and this gets back to the earlier debate around the time of the stress test, should the government allow these banks to exit the government investments? Are we so sure, given the state of the economy, new questions about the economy, that these banks are that helpful?
Well, you know, you go back to the report from a month ago that we talked about, and that is we did our report on the stress test and expressed some serious reservations about whether or not those tests were stressful enough. We felt like the time periods were too short. We felt like the negative events were not properly accounted for. And so we raised some real concerns about the Treasury putting so much reliance on a set of not very stressful stress tests to determine who's ready to get out of the system.
Professor Warren, as always, we appreciate the time. Thanks for joining us here on Bloomberg. And Eric, undoubtedly, the Treasury Secretary could be asked about this report. He's up here on the Hill.
All right, Peter. Elizabeth Warren ready to take on Jamie Dimon when it comes to defending the taxpayers.